Good morning, capital market thrill seekers. My name is Adam Livingston, and I am your #1 source for Bitcoin and Bitcoin Treasury company analysis. MetaPlanet is about to turn a polite Japanese midcap into a Bitcoin-devouring black hole. The 3-year blueprint is simple: vacuum up 210,000 BTC by year-end 2027, roughly 1% of the entire cosmic supply. Picture a moonshot with a CFO's risk table bolted to the side. Every yen of dry powder is pre-committed to spot coins. Every instrument is calibrated to spike Bitcoin per share, and the only acceptable casualty is whatever shred of credibility fiat accounting still pretends to have. MetaPlanet does not dabble in Bitcoin. Bitcoin is the entire personality. The firm's one true KPI is BTC Yield, the quarter-over-quarter growth of coins per fully diluted share. If a funding gimmick fails to raise that number, the finance team drop kicks it into Tokyo Bay. This single-minded filter has already crowned MetaPlanet the institutional gateway drug for Japanese capital desperate to escape negative real yields. Exhibit A, the Q1 zero-discount moving strike warrants program. 93 billion yen raised, average exercise price 444 yen, a 6.8% premium to spot on launch day. Warrants soaked up just 7.5% of daily volume, so retail holders never felt the knife. In 60 days, the entire tranche exercise and the Bitcoin war chest detonated from 1,762 BTC to 7,800 BTC. Now we're talking over 10,000, by the way. That is triple-digit BTC yield without a single balance sheet migraine, something Japanese analysts previously filed under mythical beast. Phase 1 was kindergarten. The 210 million plan is grad school nihilism in spreadsheet form. 122 billion yen already hurled into Bitcoin at an average 13.76 million per coin. The stack jumped to 8,888 BTC, blitzing 89% of the 10,000 coin 2025 target in 5 months. Global public company leaderboard vaulted from number 15 to number 10 overall, number 1 in Asia. The equity war chest Series 12 SARS added 9.5 billion yen, Series 13 to 17 another 93.9 billion, making MetaPlanet the most prolific issuer in Japan this year. Market cap answered with a 188% sprint, while BTC Yield screamed 225.4% year-to-date, equal to 3,971 fresh coins or 59.5 billion yen in unrealized gain. These are not back-tested fantasies. They are live-fire results proving that when executed with surgical cruelty, equity instruments can transmute dilution anxiety into an unstoppable Bitcoin accumulation engine. MetaPlanet just ripped the pin out of a 770 billion yen grenade and lobbed it into the Japanese capital markets. The blueprint issue 555 million moving strike warrants, a pile equal to 92.4% of shares outstanding, that can drip into the tape from June 24th, 2025 through June 23rd, 2027. The initial strike is 1,388 yen, floor at 777 yen, and the strike resets every 3 trading days, so the pricing stalks spot like a heat-seeking missile. 3 series, number 20, 21, and 22, each clear at 100%, 101%, and 102% of the reference price, meaning dilution is sold at a premium and the yen goes straight into Bitcoin and not head office cappuccino machines. If successful, this single facility will shovel more capital into BC than any public deal in Asian history. Think of the 555 million plan as an at-the-market cannon with a comedian's timing. Because the warrants chew only 7.5% of daily volume, the same participation rate achieved in the early 210 million plan, they can finish dinner in 104 to 157 trading days, roughly 6 to 10 calendar months without choking liquidity. Premium pricing 1% to spot on average means every share is like selling imaginary stock to buy very real Bitcoin. For context, at that pace, MetaPlanet could absorb the entire circulating supply of Japan's soy-based junk bonds before the next cherry blossom season. Starting from around 10,000 BTC today, the roadmap vaults to 30,000 BTC by December 2025, 100,000 BTC by 2026, and a lunatic but fully model-back 210,000 BTC by year-end 2027. That is a full 1% slice of the immutable 21 million cap. The compounding looks like a stairway drawn by an accountant on psychedelics. Each funding round doubles the collateral, lowers the cost of the next, and drags even more capital into the slipstream. By 2027, the balance sheet resembles a small central bank, but with memes instead of monetary policy meetings. This This here is a nice visual of the current shares outstanding versus what will be coming with the 555 million plan. We are now up to 1.6 billion total authorized shares. Here's the lofty goal of 210,000 BTC. That is a goal of 21xing their holdings in a little over 2 years. Talk about bullish? Yeah, that's bullish. It's so bullish, it's exponential. Right now, METAPLANET is on pace to double their Bitcoin holdings every 62 days and doubling their Bitcoin per share every 90 days. Behold the alchemy that turns share count anxiety into a Bitcoin geyser. BTC Yield, METAPLANET'S North Star KPI, remember, is the percentage change in coins per fully diluted shares. Multiply that yield by the starting stack and voila, you have BTC gain. Multiply the gain by spot price and you get the yen windfall that makes auditors faint. Example, starting at 1762 BTC, crank the yield dial to 225.4% and out pop 3,971 fresh coins worth roughly 59.6 billion yen at 15 million yen apiece. The BTC yen gain is what would most likely appeal to TradFi normies stuck in the 1980s because we like denominating our metrics in BTC only. METAPLANET'S treasury chart looks like a cardiogram on espresso. The pile now weighs in at 10,000 BTC. Here's some growth math the old guard can't stomach. Total Bitcoin holdings have now ballooned 6,200% since the 2024 kickoff, while fully diluted shares crept a mere 233%. Translation, coins outran dilution by a factor of 26. The result is a balance sheet that looks like it found a GameShark code for compounding. Recent readings of BTC Yield, 309.8%, 95.6%, and 66.3% so far in Q2 2025. Management's modest quarterly target was 35%. We are absolutely smashing that, folks. Year to date, the scoreboard reads 225.4%, pulverizing the full year guidance of 232% before Q3 even boards the train. For context, that pace would let METAPLANET mint the Bitcoin equivalent of a mid-sized nation's gold reserve every 18 months, without issuing a single Satoshi-denominated IOU. We're already at 97% of original guidance. METAPLANET has now stapled a nitrous tank to its KPI dashboard. Management's revised goal for calendar 2025 is a 600% BTC yield, almost quadrupling the already absurd year-to-date clip. Translation, everyone in Tokyo who thought 225 was spicy just discovered that was the training wheels version. The modeled path ramps quarterly yields from the current 66% to a bare-knuckle 100% in Q4. And the math pencils out because dilution is sold at 1% premium to spot, effectively charging investors for the privilege of being diluted. Targets without tonnage are cosplay. Here's the haul: 15,000 fresh coins by December. At today's 15 million yen per coin, that is a 225 billion yen liquidity snatch from the bond market's pocket change. The kicker is capital efficiency. The year-to-date stack ballooned by 59.6 billion yen of notational, so the forward guide merely says, repeat that stunt 4 more times and call it a fiscal year. High liquidity enables efficient and rapid execution of the 555 million plan. As you can see, the average daily trading volumes are massive. METAPLANET's giving a 6 to 10 month timeline for full execution of the plan. Liquidity is the oxygen of capital markets, and METAPLANET inhales like an asthmatic who just discovered scuba tanks. Since adopting the Bitcoin standard, the ticker has printed as much as 1 trillion yen plus notational turnover during peak weeks, a velocity that leaves blue chip samurai like Toyota wheezing in the service lane. Bloomberg's volume bars now resemble the Manhattan skyline, with individual sessions bruising the 8 billion mark on the chart's y-axis. In practical terms, the order book can swallow an 8-figure block trade before the espresso machine finishes hissing, which is why arbitrage desks treat METAPLANET like their private vending machine for instant BTC beta. The follow-up graphic shows that this geyser is persistent. From April 2024 to June 2025, the tape barely dropped below 2 billion in monthly value traded, and several bursts top 6 to 8 billion. For context, that means 2 trading days in METAPLANET equal an entire month of liquidity for the median TSE midcap. Market makers love it because spreads stay razor thin, and warrant dealers love it because they can dribble dilution into a 9-lane highway without leaving tire marks. Performance, second place nationwide, and first place in the hearts of anyone who hasn't sworn a blood oath to Topix index funds. Year to date, the equity has ripped up 325%, dusting 98% of every Japanese company north of a 50 billion yen market cap. Put differently, the only thing outpacing this chart is the compliance officer's heart rate every time management hints at another Bitcoin tranche. The equity is up in order of magnitude more than the average TSE heavyweight. Number 1 feels pretty damn good. Number 1 by a 10x margin of victory feels even better. Why does this alchemy work? Because Bitcoin itself is capital rendered in pure mathematics. Proof of work forges a thermodynamic umbilical cord between photons, silicon, and cold hard scarcity. MetaPlanet's thesis is brutally simple. If capital is being repriced from analog to digital in real time, the smartest trade is to sit on the digital side of the bridge and charge tolls. Every warrant, every rights issue, every sleepless night in the treasury bunker exists to weaponize that transition. Here's the secret behind that smug mNAV greater than 1 multiple everyone keeps whining about. The equity behaves less like a boring closed-end fund and more like a leveraged time machine priced in Satoshis. The market is not paying for today's 10,000 coins. It's front-running tomorrow's volcanic BTC yield and the carnage that yield inflicts on share count. In other words, the quote on your screen is a discounted cash flow model for future Bitcoin that hasn't even been mined yet. Dissect the premium and 2 variables shout louder than the rest. Expected BTC yield, MetaPlanet's quarterly per-share growth rate, currently track-splitting Formula 1 lap times. Forward BTC price, whatever number Laser Eyes Anonymous decides is next on the road to hyper-Bitcoinization. Multiply your starting stack times your BTC yield times the future spot price, then bolts that figure onto present NAV, voila, a reflexive feedback loop where every uptick in either variable detonates the equity like a volatility harvesting call option on digital gold. Traditional analysts keep trying to shoehorn this thing into a Graham and Dodd box score. Wrong game. MetaPlanet's valuation is literally BTC NAV plus the present value of every coin it will ambush later. Because management monetizes volatility instead of hiding from it, the future gain term in that formula mushrooms whenever yield or price expectations lift, even modestly. That's why the chart behaves like a rogue AI scribbling power laws on a logarithmic napkin. Still skeptical? Enjoy this bullet shower. 225% BTC yield year-to-date and accelerating. One of the most liquid tickers on the TSE, bundled into global ETFs so passive flows do the heavy lifting. Trades on 3 markets around 100 hours per week, basically a perpetual motion machine for liquidity. Ranks among Japan's most volatile and best-performing equities since the Bitcoin pivot. Monetizes volatility via cash-secured put selling, income while buying more BTC. Access to the cheapest warrants and bonds in Japan, turbocharging leverage, balance sheet so pristine it could underwrite a monastery, yet still room for debt-fueled BTC assaults. Taxed advantage NISA eligibility solves retail custody headaches. It bridges Tokyo's yield desert to Bitcoin's oasis, smashing every compliance barrier in its path. Bottom line, guidance is written in bold, neon, spray-painted optimism. The global discount rate is no longer set by Powell's press conferences. It's set by SHA-256. Bitcoin is actively dematerializing $300 trillion worth of 20th century store of value sludge. And the first movers get to write the new term sheet. The $555 million plan, therefore, isn't a fundraise, it's a high-conviction land grab on the only piece of economic real estate that can't be inflated, seized, or bailed in. Volatility, perfect. MetaPlanet bottles it, sells it at a 1% premium via moving strike warrants, and redeploys the yen into spot BTC before the compliance team finishes their morning coffee. Here's the calculus. Map mNAV ratio on the x-axis, slap additional BTC yield on the y-axis, and the target accretion window glows between 3x and 6x mNAV. Even a mildly bullish 3x band only needs around 50% incremental yield to yank the stack to 30,000 BTC by December. In Tokyo speak, that's a single extra warrant series and a couple of fat green candles. Anything above 4 turns the chart into a hockey stick and forces the shorts to relocate to a monastery. Jim, I hear they can use you there to mop the floors. MetaPlanet's risk desk modeled a scenario that would make a CFA's monocle burst, start warrant exercise at 10% of market cap, taper the drip by 0.75% per month, mark mNAV down 2% monthly for conservatism, and let Bitcoin jog from 105K, adding 5K each moon cycle. Even those with hair shirt inputs, the stack streaks past 22,254 this Christmas, hits 72,233 Bitcoin by September 2025, and slams 102,606 BTC by January 2026 if the equity trades at a 6x handle on mNAV. That's a treasury curve shaped like a hockey stick drawn by an adrenaline-addled quant. Notice how every colored band from 3x through 6x mNAV explode upward while historic BTC holdings barely keep pace at the bottom. Translation: if mNAV expands even modestly, dilution morphs into jet fuel and the treasury lifts off faster than the shorts can refresh their margin dashboards. 6x mNAV dilution gets us over 100,000 Bitcoin by December 2025. This is why high mNAV does not mean overvalued. Their historical days to cover is about 182 days. The premium you pay to own what the stock represents is burned off in only half a year. Management once published conservative targets, 35% quarterly BTC yield and 10,000 coins by New Year's Eve 2025, then blasted through both like a drunk sumo through a paper door. The slide also reminds investors that moving strike warrants include a suspension clause. The company can freeze issuance on 5 trading days' notice if price action gets silly. Proving dilution here is a scalpel, not a chainsaw. Final toolkit roll call. Third-party share placements for rapid firepower, rights issues when retail wants in, moving strike warrants, Japan's ATM on cocaine, ordinary and potentially convertible bonds for cheap leverage, yet unused preferred stock for strategy-style perpetual ammo, and operating income from a super rad Bitcoin hotel. All of it serves a 7-point prime directive: accumulate Bitcoin, treat investors fairly, grow the stack relentlessly, optimize BTC yield, outperform Bitcoin itself through disciplined leverage, and evangelize digital hard money across Japan's capital-starved archipelago. METAPLANET'S endgame is mathematically rude: 210,000 BTC by 2027, a clean 1% of the total supply cap, and they're going to run through this plan like it's nothing. You're gonna blink and we're gonna be at over 50,000 BTC. Book it. If the mNAV stays anywhere between a 5 and a 6 the rest of the year, we're going to 10x our Bitcoin holdings in less than 6 months. I could not possibly be more bullish on this stock. I hope you enjoyed me talking MetaPlanet today. My name is Adam Livingston. Remember, this is not financial advice. This is financial entertainment. I hope you have an amazing day.